Hey everybody, Chuck Barone here. Thursday, January the 26th, 2023. A very busy day on Wall Street. Lots of stuff to talk about today. Fascinating day in the markets. Depending on, I guess, your point of view, a pretty good day for the markets. As always, though, before we start the show, I just want to thank everybody for their support. Welcome you guys to the show. We appreciate everything you guys do for us every day. Markets today, well, let's go. Stocks today, a very nice rally across the board. A lot of data we're going to talk about, leading this rally, leading stocks to be a little more optimistic about the economy and the way things are going. Today on the S&P 500, we had 22 new 52-week highs with 0 new 52-week lows. I like the sound of that. And all the other indexes were pretty much the same with new highs and lows. None of them had the 0 that the S&P did, but that's still pretty awesome news. Stocks having a reason to rally today. Let's see how the data goes. I mean, things are kind of, looks like, with a heavy emphasis on not sure completely yet, but it looks like things are kind of breaking well for the U.S. economy. A lot of people doom and gloom, recession talk, layoffs, and a lot of negatives in this market, in this economy, but the data keeps pointing otherwise. So, despite what you guys are hearing, not everything is completely doom and gloom here. So stocks rallying on good news. Bond market down just small today. The 10-year, actually the bond market down, yields rising. The 10-year up 3 basis points, sitting at 3.45%, was touching 3.5% earlier in the day. The 2-year at 4.19% was well over 4.20. That's up 5 basis points today. I think, this data we got today certainly is not going to discourage the Feds from continuing to raise rates to fight this inflation. We'll see how bond yields work now. We had big moves to the upside as far as yields go, then big moves back down. Now it looks like the trend is turning and things are moving back up again. We're going to follow that for you guys every day. Make sure you guys are aware of what's happening with fixed income. We talked yesterday a little bit about wealthy people with big sums of money in savings and money markets moving their money around. I just saw today in the Wall Street Journal, money market funds drawing new investors who are going crazy looking for new yields, higher yields on their money, and are getting it. So they're moving their money where the yields are. So we'll see how this market reacts to that. Interesting stuff. Dollar today up very small, 0.27 on the index, 101.81. That's not a strong number for the dollar. As you guys know, it was a short time ago, just 4 months ago or so, during the summer at 109, has been drifting down ever since. Even though it had a minor update today, it's still looking kind of weak. Metals today, mixed. Gold had a little bit of a sell-off, down $15 and change at $1,930 per ounce. Still a strong number for gold. I think we're going to see $2,000 gold. Silver up 2 cents, $23.91 per ounce. Was briefly over $24. I think we're going to see $25 silver very soon. Metals look like they really want to rock and roll. We'll see how things go in this inflation fight, but I think there's still a little ways to go in this metals rally. Oil today up small, 94 cents per barrel, 81.09 for a barrel of West Texas Intermediate. Oil's been kind of, it had a big run up with the big freaking out of Saudi and Biden over there smooching butt. But then they saw demand coming down, saw warmer weather than they anticipated. So things troughed out. And then China is confusing the world with its, are we open? Are we not open? Is there going to be demand? Is there not? Are we open? And if we are, how's our economy? Oh, it looks kind of crappy. We only had 3% growth last year. That's the worst we've had in a decade. So anyway, very mixed signals in oil. But it's I think it's going to kind of get back into that comfortable trough for oil at between 80 and 85, and it's going to drift in that trough for a while. So keep your eye on oil. We'll do that for you guys as well. I just thought it was interesting today. I stopped following natural gas. I just thought that market was just haywire. I took a peek at it today, though, to notice natural gas now under $3 for their million BTUs. Wow, that's quite a decline from above $9. Bitcoin today, up very small, $92, $23,048. Bitcoin holding up, man. Big rally going in Bitcoin. Let's see if it can continue. I need to get into some charts on Bitcoin, even though charts for crypto is not real super reliable. But I'd like to see where resistance is, where this rally might break down. We'll bring that news to you guys as we gather it up. News you guys need today, interesting stuff. Well, as we all know, fourth quarter GDP came in today, rising 2.9%, a very solid number for the fourth quarter. They were expecting a gain of 2.6%. This likely will give us a positive GDP for the year for the United States, a decent number. Now, I know that, they say that if you're still working and you're earning more money than you used to, it certainly doesn't feel like a recession to you. I think that if you had 2 negative quarters in the first 2 quarters and 2 decent quarters in the third and the fourth quarter, I don't know how you would define a year like that other than retarded. Excuse my Manarino language there. But just everything seems to be mixed signals, making it very difficult to get a clear direction. But this GDP number is certainly good news for the stock market. Another big news today, jobs, man. Jobs continuing to sizzle. Unemployment claims coming in at 186K. Shockingly low number. They were expecting it to jump to 205,000. Last week's was 192. They thought it was going to jump. It's declining. Job market, big job market, still hiring like crazy. It's interesting because this is one of the ones like I was talking about earlier in the show here today, how we're getting nothing but negative news and everything's negative. All these companies announcing layoffs. Well, it has not affected unemployment claims. So either they're not actually laying all these people off that they're announcing the claims for. The people who are getting laid off are very quickly finding new employment, or they're not being employed, but they're not making unemployment claims, which is probably the least likely of all them. So jobs. So now you have when you add all this stuff up, right? So you got the fourth quarter GDP up 2.9. You got super low unemployment rate, 3.5% last time they measured. We'll see where it is now, if it's going to come down even a little from there. Unemployment, super low. Jobs plentiful for people who want them. Well, does that sound like a recession? Or does that sound like maybe it's time to start kicking some tires here and doing a little sniffing around? Might be time to start searching for some bargains. Now, I'm not predicting that we're out of the woods, and I'm not suggesting you go all hog wild now, getting all kind of money in the markets. But it might be a decent idea to take a look at some of these stocks that get beat up over the last year and see what they're looking like. We'll bring some recommendations there as well. Earnings, adding another piece to the puzzle. Earnings today coming out pretty good, guys, especially Tesla, man. Wow, 3.7 billion profit in the fourth quarter. Nice job, Tesla, man. They are rocking and rolling. I was reading they said they could produce 2 million cars this year. Other companies coming out with good earnings. So, okay, add it up. GDP rising, unemployment low. You got corporate earnings still super strong for the most part. At the same time, you got consumer debt at record levels. Consumers feeling very negative about the economy. You got the real estate and housing situation. People worried that real estate's going to go have a housing crash, 63%. 63% of the people polled saying we need to get another stimulus out there to offset inflation, which amazingly, the 63% number is the same number of people who were polled living paycheck to paycheck. Well, I guess if you're in that situation, any little bit helps, right, guys? Anyway, it's just been the craziest week, the craziest day. We'll wrap things up tomorrow. We'll see what comes across the desk tomorrow, and of course there'll be further interpretations of the data we got today. We know next week is a huge week with the Fed rate increase coming. Now there's some speculation with all this strong data coming that maybe they're going to raise the half point next week. I don't think so. I don't think the Fed, they've stuck to their guns and what they've said they're going to do so far. It's been working. Inflation numbers coming down with not a lot of damage to the economy. The doom and gloomers, and myself among them, I really didn't see them. You've heard me joking about this soft landing thing. I still have my doubts about that. But, all in all, things looking like they're going the Fed's way. Maybe St. Jerome, really, there is something to that saint thing, what I tagged the nickname I tagged him for, because the guy really, was working some amazing miracles in the bond market earlier this year. And now it looks like the guy might be pulling off the miracle of miracles. Go St. Jerome. And in closing today, I just want to get off finance a second. And can I just do a little bit of a tiny little rant about this Ukraine stuff? Now, I'm all for supporting our allies. I'm all for stopping aggression, companies thinking that they can just take over their neighbor if there's any kind of dispute. Might makes right kind of thing. That's not what I'm about. But I think that our strategy in this war is not a very good one, man. Now, I was just reading today. First of all, we're draining our own treasury, sending them billions and billions of dollars in equipment, stuff to keep this war going. Now, they've been saying they're going to try to help them with defensive weapons, which is what we've done for the most part, okay? Training them here in the United States and doing some other things like that, twisting ally arms to get them to do some of the dirty work we don't want to be responsible for. But this whole tank thing now that I've been reading about, now tanks are not really defensive weapons. They're designed to go offensive. It seems to me like the military-industrial complex is having their way over there, man. We're getting billions and billions and billions and billions of dollars sent their way for this defense crap, and not an American soldier at risk over there. So they're getting the best of it. They get to make billions, and they don't get to have the American people screaming bloody murder about stop the war, right? Well, I think it's time to start thinking about how do we end this war? What is our actual end game here in the United States for this war? What do we see really happening at the end? Is it really our intent to try to humiliate a world power like Russia? Is it really our intent to literally back them all the way into a corner, forcing them to lash out? If you have enemies, do you want to make your relationship with those enemies even worse? I mean, what do we gain here by forcing this and talking about Ukraine's going to actually win this war, which is impossible? I think that we need to get some diplomacy started up here with the Russians and the Ukrainians, use the influence that we have here, as well as our allies, and find a way to stop fighting, man. Stop the dying. And I'm reading about these missile strikes on civilian targets, and I'm reading about all this crap in this war. How come nobody's doing anything to stop it then? How come Zelensky's not talking about let's have talks, but asking for more and more sophisticated weapons? And how is this our war, guys? Now, I get it that Ukraine is close to a lot of our allies, and there's a strategic military thing here, but man, this is getting a little out of line now. They did that 1.7 trillion spending bill that everybody's freaking out about, Biden, spending like crazy. More than half of that money went to the military-industrial complex. Really? So now we're spending half of our budgeted money for the military and weapons and fighting wars and proxy wars in other countries. I think we can find a more productive use for that money. I'm a little pissy about our military-industrial complex. You know, they talk about we spend more than the next, you know, you take the top 10, the United States, China, Russia, Great Britain, and all the countries that spend money on defense. And the United States at number 1 spends more than the rest of them, the top 9, or number 2 through 10, combined. So I got to ask the question, how is it friggin' possible that any of those countries could have weapons we don't have? How is it Russia has supersonic missiles, we don't, we can't defend against them, and we're spending 10 times more than they are? How is China's Navy catching up with our Navy? We're spending 10 times more than they are. How the hell is any of this possible? I'll tell you how. It's a money pit of graft and corruption. Everybody feeding at this trough. We've been warned about it and known about this for years and years and years since Eisenhower was president. Basically, since his warning, this country has been in a perpetual state of war, except for a short time after the fall, at the end of Vietnam, where we were afraid to commit our military to anything again, and then for a short time again after the fall of the Berlin Wall. Other than that, we're always fighting somebody, or supplying somebody, or preparing somebody, or doing some shit, and it's none of it good for the general public at large, unless being a big bully or being the toughest kid on the block is your goal. I don't know. Anyway, that's it for today, guys. Appreciate your patience and listening to me with my little rants and pet peeves. We'll be back again tomorrow to wrap this week up. I'm sure it's going to be an interesting finish. We appreciate your support. If you like what you're hearing, hit the like button. Questions in your comments section. We'll be back again tomorrow to wrap everything up. Until then, guys, take care. Thanks.